The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Well, what do we have today? I will offer my theory, and that is normally when you have these big moves, we talked about it earlier this week, it's all about margin calls. Especially when you have a market that only goes one way. It's not uncommon for people to keep leveraging up, and leveraging up. This was not much from at least reporting a problem with retail traders, but hedge fund managers trying to regain lost glory of the last few years where they've underperformed. So what did they do? As these stock markets went higher, they leveraged higher and higher and higher. They started a few years ago with 20 to 1, and a lot of these guys were at 35, close to 40 to 1. Markets don't need to move a lot to wipe these guys out, even if they started with fairly decent positions years ago, continue to add on the way up. Margin calls, normally you get 3 days. My guess is that Tuesday wiped out a lot of folks. The ones that didn't instantly get wiped out overnight from Monday to Tuesday got their 3 days. And there's a book called The Little Book of Behavioral Investing, and a pretty good book. But what we do know from past retreats from euphoria in the market are that people have a horrible time selling the losers. They'll sell the winners, and then the losers continue to move down, and they have bigger problems with that. We started seeing the market move down about a little after 10:15, 10:30, and my guess is those were the morning margin calls. There will be yet another round, probably somewhere between 3 and 3:30. They will have to be out by 3:45 by most brokers, not all, but most brokers will say that you have to be out by 3:45. And what you will see, I suspect, is the tail end of that today. Off 43 on the S&P cash, off 480 on the Dow, the Nasdaq's off 121, the Russell's off 16. So what happens? Well, the people that have to sell create more people that do sell. It's kind of like a nuclear reaction. One pin hits another, hits actually 2 pins. 2 pins hit 4 pins. And you get the kind of rout we get in 1 week. One of the things that is true is that huge moves in the market generally extinguish themselves fairly quickly. It's the ones that trickle down every day that tend to last for a very long time. Even the worst one in the world, I guess you'd probably say it was close to that in 2008. Didn't last till March in 2009. And we don't have a lot of dead bodies laying around like we did then to expose. Have a lot of people with excess leverage, but it's not the end of the world. So what are we going to see today? I suspect you're going to see me coming in at the last couple of minutes and buying a few things. Just on the fairly decent speculation that the weakest hands and the ones that are forced out by the margin sellers will mean that there is a fairly decent support level around this area. Try to find stocks and indexes and ETFs with good relative strength, and of course stocks that probably companies that don't have to borrow a lot of money in an increasing interest rate world is another issue. Most of the big companies like Apple, Microsoft, they've been selling bonds for years at ridiculously low prices. They don't need any cash. They're going to be repatriating lots of cash. They can go out and buy other companies that do have to pay up in the coming years as interest rates normalize. So we've got a thing that continues to kind of circularly go after the big companies, i.e. they got the cash. And it's going to be harder as time goes along. We'll look at a couple of stocks that I thought were canaries in the coal mine that also tell us some things about technology. What else do we have out here? That's about it. Now, I got some email already. Have we seen the low for the day in or the low for a few weeks? My belief is that if we can see a fairly decent low by the end of the day, and the selling kind of dry up into the close. You know, you go into a weekend, does anybody want to be long? And there's always that argument. But my guess is that this market is so washed out now that we're either going sideways or going a little higher. Now, after this huge move, is it going to be a straight line down? Probably not. Could we rally back up to 2780? I think it's certainly possible, maybe 2785. And then, if that's on very light volume, you could see the next leg in it. We've talked about the model from Jean-Pierre from France. What was that, 2 months ago, 3 months ago? Of the boom-bust cycle that comes in. And there's, after that huge move off the top, there's always kind of a belief that you get back to normal. I'm not betting on that because things are going to have to deteriorate a great deal for me to believe that. But even if I was bearish, there is the idea of return to normal on the next leg up, even in a bear market. Some people will call it a B to C. The question is whether or not that B to C just takes the rest of the year to get back up to the previous high. And there's a lot of reasons why, but a lot of cash in people's pocket. A Fed that's very active in raising rates, so inflation will probably remain low, especially since the government has decided not to go throwing cash around. There's a handful of deficit hawks in the House that looked like they put the kibosh on the $1 trillion of spending in infrastructure. A great deal of what we were looking at, I think, in the market was thinking that that $1 trillion trickled down, and there may be some smaller infrastructure bills. But if anything resembling what the deal is right now in the House and Senate passes, you know, we could continue to see weakness in companies like Caterpillar and others that were basically run up on the idea of these huge infrastructure bills that are not going to at least happen this year. Maybe they bring them up again after the elections these falls, but that's it. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can put a message in the den, and you can actually go in the den if you want, because we've got an open house. Go to the front page of TFNN and check it out. We shall return momentarily, start looking at some stocks that might be friendly to us fairly shortly.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
On this day in 1943, Japanese troops evacuate Guadalcanal, leaving the island in the Allied possession after a prolonged campaign. Both sides suffer heavy losses of men, warships, and planes in a battle for Guadalcanal. Estimated 1,600 U.S. troops were killed and over 4,000 were wounded, and several thousand more died from disease. The Japanese lost 24,000 soldiers on a day where we all think things are bad. But they can be a lot worse. So what are we doing out here today? Let's go ahead and start looking at some charts. Let's go ahead and update this. For the big winner of the day, we'll give it 2 party horns, is Grubhub. I guess we can't underestimate the laziness of the American individual, who's even too lazy to go through the drive-through or the drive-up anymore, and it has to have Grubhub absolutely deliver the food. I've seen that around here more likely. Now, of course, some of these folks are kind of invalids, but I've seen even a lot of other people that are literally won't stop on the way home or anything else and getting food delivered because it's just too much trouble to go out. Of course, that kind of eats into restaurant business, but with more disposable money in their pocket, maybe we find more people doing Grubhub. Certainly their earnings were good today. And maybe other restaurants, people are going to start stepping up with a little extra juice in their pocket. So we'll look at that. And of course, we got a handful of stocks that actually were lower out here. And we'll kind of, we'll talk about them a little bit. The one the most interesting to me is Tesla. And they kind of opened up decently and kind of rolled over. I was half tempted to short this thing at 360, and just unfortunately the thing's got perpetual short interest of a huge amount. In fact, let me just go ahead and pop that up so I don't tell you incorrectly. Hang on, let me get my little stuff up here. Okay, there we are. Okay. TSLA. Let's look at their short data. Okay, 6 days to cover. Okay, so literally it would take the volume of 6 days to cover. You're not going to find these things coming down fairly hard. So what you need is this to just burn off that short interest. When we look at other companies like Snap that had 50% short interest, or generally perpetually 50%. Let's take a look at that. SPAN. I think it was 9 days to cover on Snap. Yep, 9 days to cover on Snap. So literally it would take the volume of 9 days to get people out of it. And then, you know, if all they have to do is kind of show a good day out here and the market runs these guys out. But again, my guess is that everybody's going to be piling back into these shorts fairly quickly. And, you know, it's not uncommon to see 20% of all orders initiated as short sales in Snap in the last couple of weeks. It's kind of come down a little bit, but you know, you had your big hammer yesterday on this thing. It's just very, I will tell you this, that generally the stocks that get hit the worst in big slides like this are the ones with the lightest short sales, because there aren't any people to be natural buyers like we saw on Monday and Tuesday and today when the market comes back. So you're almost better, especially in fast-moving markets, to be in stocks where there aren't a lot of people to slow the move down. And in fact, the entire market had been very, very lightly shorted and heavily leveraged with VIX products and other hugely leveraged products. One of the reasons we may have moved so quickly and so fastly down after getting a big shove from the Fed. So we can keep a like on that. No kitty face for you, Polar? I don't understand that. Kitty face. Oh, is that, oh, that's Snapchat stuff. I don't do all that snap face and Twitter book and all that. It's just a fad. I'm just kidding. I've said it before. To me, it just seems so narcissistic. As a Midwest raised boy, military brat, you just weren't that kind of a show off. You don't, and two, I can remember having to be shoved into a room and watch the slideshow of other people's vacations. And I don't know, but there may not be anything more boring in the world than that. Or is that just me? Anyway, my life experience says that Snapface and Twitter book and all the others may be fairly interesting, but not a lot of reasons for me to get involved. TWTR, that ship has sailed for me. Of course, Twitter, big earnings today, but it's given back some. Now, this is another one that had some huge, let's take a look at that one. Actually, this one had lost a lot of its shorts. This thing used to be about 5 days to cover. It is around 2.5 going into earnings. So actually, maybe one of these reasons why this one kind of came back a little. The whole issue, and I had some people ask me whether or not, let's take a look at Facebook. If you didn't see it, Jim Carrey, who used to be a big draw in the movies and no longer is trying to start a boycott of Facebook because he's sure that the Russians rigged the election. He was one of those guys that was kind of the anti-vaxxers for a while with his girlfriend. No stranger to wild conspiracy theories. Facebook did break the previous January 17th low today, but it is holding at 27 million shares, 28 million shares on January 17th. Today you've got, 27 million shares. Still not breaking it. This is kind of where support is going to be. One of the reasons I suspect that a handful of these stocks are going to find support in this area, probably at the close today, because it's going to be, you're probably going to have people that have bought earlier in the day that are going to sell. You got people that are probably still having to sell and hoping that the market turns around. We talked about that at the beginning, the little book of behavioral investing. And I'm pretty sure it was in that book that details almost always the people hit with margin calls wait to the last second and then actually dump. Some, not all of them do, but a vast majority of them. And they may be just taking them out and shooting them one by one today. But certainly anybody that was heavily leveraged, either retail traders, but more of the hedge funds, I'm suspecting, are seeing Goldman Sachs take things out to the whipping post. Oh, I got that song. So we'll look at that. I just talked about Twitter. What are my thoughts on it? They at least are starting to make money, but that still makes them incredibly expensive. Kind of the exact same argument that we would have with Tesla, which is, are you going to need a lot of money to grow? Are you going to need to borrow that money? Are you going to be able to issue new shares? And is that going to be the way you get your cash? So we'll see. But my guess is that Twitter is going to be probably issuing more shares in the near future.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, that was exciting. And anyway, we are back. Wanted to look at some charts we've got out here. Check some emails. Okay, we got a couple of those, so we'll look at those. You can always email me at path@tfnn.com. So what I want to look at right now is just a handful of these stocks that are back at previous lows. Clean Harbors, kind of interesting to me. The volume was kind of big yesterday, but reversed off its previous bottom over here on August 22nd. The energy for all the huge move down for the market wasn't that much more than the market volume up or energy up and down. Did have a lot of volume yesterday. So some of these things are looking like, you know, they may be interesting. Clovis Oncology, some of these biotechs look like they've come back to fairly decent support areas. Clovis CLVS is back to this gap that goes back to the, May 17th of 2017. We've got some other ones. CRTO, Criterio. I don't know a whole lot about this company. What is this? CRTO. A technology company engages in digital performance marketing in France and internationally. The company's Criterio engine solution includes recommendation algorithms that create and tailor advertisements to specific user interest. Interesting. Anyway, kind of interesting out here that you are now retesting this $22 low from December 14th at 16 million shares with about 600,000 shares a couple of days ago, and this goes sideways. This may be a play on strengthening economy in Europe, maybe not. We talked about canaries in the coal mine. I had a couple of them. We are now testing the previous low of February 17th in Digital Realty Trust. They're a REIT in the Silicon Valley high-tech community. This one's at $100.77 with 2.3 million shares. So far today, we're in it with 1.3 million shares. And we kind of got a roll-off on this. This did lead the market as one of the REITs. One of the other ones is VNQ. We talked about it being the one that bothered me most. This certainly down here banging around previous lows. We need to go a little bit farther back now, don't we? Okay. What we were waiting for this one to be, and this is the Vanguard REIT ETF, is the November 10th, 2016 low at 74.69. Had 13.5 million shares. So when we got back here, you got 12 million shares 2 days ago. Yesterday, 7.5 million shares. Today, you're down with about 7 million shares. We're probably at somewhere around these REITs bottoming out. Now, we talked about the reason maybe 2-3 weeks ago. Oh, Emerson, Lake and Palmer. Yeah, I knew that. I just was surprised that it got played. Anyway, didn't see it coming. Anyway, we've got this back, and it's probably going to be at least temporary support around these levels. But when we talked about this 2 weeks ago, of course, we talked about the most damage being done in REITs in previous huge pullbacks in the market from 1929 to 1987 and 92 and 2008. These things are kind of the quiet animal in the corner that you never pay much attention to. You know, a python or a scary badger. You kind of pay attention to it. This is kind of animal you just like a sloth, but maybe a sloth that's a hitman in his spare time. You don't know that. Anyway, Mr. Vanguard REIT VNQ was the first sector to actually fall apart. And it did when we started hearing hints back on through July of 16 to November of the 10th, when we started seeing the same kind of action in bonds that made us think that interest rates were going to be up for a while. That didn't really happen. You kind of got a 50% retrace back up into this 86 area where this thing did retest those highs. It rolled over. It did break that March 10th low of last year, and since then has continued on down. But that does kind of tell you that the interest rates are at least off their lows and are going to be like that for a while. So anything with that's highly rate sensitive is probably a risk off asset for the time. Now, when we go back to Digital Realty Trust, this also means that we suspect that there are going to be a lot less startups in the near future. And strangely enough, when all that money goes away, you find that people go after stocks that are existing in the marketplace. Instead of trying to hit the home run, they go for the double and other ones that they like until the market comes back and gives people a reason to throw lots of cash at the market again. But I think as we look at IPOs over the next 6 or 9 months, we're probably going to see a real decay in that. The other thing is, as interest rates raise, we're also going to see less buyouts. So we'll keep an eye on those. Let's take a look at a handful of these others as we go along. Got a couple of minutes in this segment. Electronics for Imaging, EFII. Could be finding a bottom out here. This thing had almost 5 million shares on August 7th of last year, 25.54. Almost got there on November 15th last year. It certainly threw it, or down to it, let me put it that way. And volume fairly light, 281,000 shares, compared to a 5 million share low back on August 7th of 2017. So if this market does start to find some lows, we're going to probably find some of these fallen angels. And the next couple of days is going to tell us whether or not accumulation starts in these or they crack. Now, you want to see these things kind of go sideways for a few days, and maybe these are the ones that are going to be the big winners when we look at next fall into the Christmas season. But if we're going to get those big home run runs for the year, this is probably going to be one of the better buying opportunities for the stronger stocks, and probably at best sideways action in these that need more cash and are more interest rates sensitive. Some of the semis out here may be finding support. We're looking at the KLA 10 core, he said. That is the November 29th low at 98.91. We're hammering that with about 1 million shares, so that's not too bad. Let's take a quick look at the SMHs. Nope, not going to have time for this segment. Off 52 on the S&P cash. Burn, baby, burn. The roof is on fire. I want it to burn till the end and the close, and then I'll take a look. But I'm starting to smell maybe some good buys out here. Some good throwing the baby out with the bathwater.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Wow, you want to talk about telepathy? I was going to ask him for this coming out of the next break. I actually just typed it to him, but he had already found it. Thank you, Alan. And we will move further on. Anyway, as I said, there's a handful of ETFs and stocks coming down with very light volume today. Most of the forced selling will be over today, in my opinion. If the brokers just take them out early, it's not uncommon. But, I know that even if you've been trading for the last 10 years, let's call it 9 years, you've never seen a real big margin call. I mean, there have been a handful of them in commodities when people have been way on the wrong side of them. But, I mean, the massive margin calls in 2008 and 2001, and again, around 9/11, there were a lot of companies that just literally evaporated in a day because of unseen volatility. And, at that point, especially now, what you want to be looking at, for me, is always when you have big sell-off, if you can get it, small price stocks. And when stocks are at high, you want to be short using puts to protect yourself, if at all possible. Right now, options are fairly expensive. If you're long calls, generally these things are, and they're close to the money or in the money, the premiums will evaporate for every tick up higher. So those tend to melt so quickly that you never can make money. And puts, for the most part, have a lot of premium, but tend to decay fairly quickly too. So equities are kind of where it's at. If you can find cheap stocks in the range of $2 to $5 or something, those generally give you the biggest bang for the buck. But in huge moves like this, everybody wants to go to something that they know. It's kind of like Cheers. You want to go where everybody knows your name. No one got fired is the old saying from and being an IBM. Now, semiconductors down on pretty big volume of 10 million shares, but it is holding the 95.92 low out here. Again, these things are spitting off huge amounts of cash. The move off this high has been pretty good. Normally, you also want to look at what didn't do well last year. Not horribly, but what didn't do well last year, because this is a big chance, again, for sector rotation in the marketplace. Yeah. La Jolla Pharmaceuticals. Now, this thing's holding at its $39 top. LJPC. No weakness in this one. Don't know what it's about. I'll have to look at it later. MBIA. MBI is the symbol on this one. Coming and just finishing this gap. But not much action out here on this one today. You kind of have to like this. The downside is 604 from the October 25th low. But I certainly like the fact that this thing hasn't had volume back into December since the last time that anybody got really interested in this one. So it's kind of caught my eye. MEOH. Kind of thinks of methane. We all know methane. This one's down lower, but not a lot of volume. Had some decent volume yesterday, huge shorting, which is kind of interesting. This one's down on lighter volume today, but you've got support somewhere around 52 on this one. $55 is the low today, so that may be coming on to PEIX, is it? I'm hoping that's the right symbol. Yeah, Pacific Ethanol. I've been watching this one. Not a lot of juice on the way down, especially this last leg. No juice here in the last ones. Ethanol has become less and less talked about in gasoline, but still required. And this thing just kind of continues to drift down. But not a lot of volume in this one. Actually kind of popping and turning around a little bit today. We still require 10% ethanol in the gas in here in Florida, whether it's a good idea or not. This thing had about 100 reverse splits over the years, but it has been one of these that finally looks like maybe it's found some kind of low. When everybody thought that the low was in the other day, they piled in Micron. This thing is kind of reversed over the last couple of days. Let's go back to this. Okay, let's zoom in a little bit. This came up with a lot of volume, 66.5 million shares, down on 40 million shares so far, so we're going to look at that. But $39 looks like very decent support. You had 73 million shares on December 4th. Even on the worst day on February 5th, you got to 39.01, so you went below it with 45 million shares compared to the 73. Now, even saying that, you had some decent volume and energy on the way down to that February 5th low from the January 4th high. So maybe you get one more bite at the apple right around that gap at 40, $41. Maybe this comes into the end of the day or tomorrow. What else do we have? NXTM. Next stage of medical. Now, this one's filling its gap with almost no volume. Now, I kind of like this one. This thing gapped up with 25.2 million shares, and it's down today on 500,000 shares. So probably a little bit of investigation needs to be put into this thing. I know it's a horrible market, but man, every time I've gone after a stock that had ridiculously light volume, it's generally been pretty good. OUT. What else do we have here? Another one. Same thing. Huge gap up. No volume back into this gap. Outfront Media, OUT is the symbol on it, up on 7 million shares on September 25th. Now we're filling that gap with 1.2 million shares. Million shares yesterday. 300,000 shares today. So, again, these things are probably not going to turn around on a dime, but I'm going to have the last hour of this day to go back through and look at these a little bit harder. Red Hat, talk about a tech stock that's held up fairly well. It broke out without enough volume, but it's kind of pulled back. But, I mean, not talked a lot about on CNBC, kind of just stealthy out there, but continues to do well and certainly not beat up very bad. If you looked at that chart and didn't know the market had come back 2,000 or 3,000 points on the Dow, you wouldn't have been surprised to look at that chart or the volume in it in Red Hat. Rheology Holdings, RLGY. This one's dipping below its previous 2.5 million share low at 25.46. It's doing it with 1.4 million shares now. So that's it. We'll see what our engineer Al can come up with that's so apropos for the last segment of the show. I even rhymed that.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Nope. Okay. Anyway, off 56 on the S&P. Dow's off almost 600 points. Nasdaq's off 162, 163, 164. Do I hear 165? 162. So got fast-moving markets, and look like there's going to be a lot of stocks, not all of them, but some of them, hitting lows. Of course, we're blowing out all kinds of volume in the markets over the last few days. Today is not one of them. We're going into the 3 o'clock area with only 2.3 billion shares on the NYSE consolidated tape. And that is very, very wimpy out here. It is light. So what do you make of that? My guess and has been is we wanted to wait 2 or 3 days for forced margin selling. I suspect that if we see a big push of volume and the big guys on the other side buying it as fast as they can force people to sell it, we probably have at least a temporary bottom in these. And how long will it last? I think we could probably do a 50% retracement of this move down. And that may be a lot more volatile up and down. And a lot of it's going to be you being in the right section. But we get a blowout into the end of the day today, and this volume continues to be extremely light. Like I said, 2.3 billion shares. I think we were doing about 4 billion shares at this time yesterday. So even though we've got a lot of action, we don't have the kind of volume we've had before, which has got me smelling something out there that doesn't smell too good. Maybe a little four-legged rodent. I think maybe there may be a buy out here by the end of the day, so we'll keep an eye on it. In the meantime, sell when you can, not when you have to. We will be back here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.